Hello, traders. We're in the building. Let's get this on it.
Yeah, buddy.
Yeah, baby.
Lightweight. Yeah, buddy. Lightweight.
Oh, it's on thingy, isn't it? Oh God,
It's in a loop. Hi, everyone.
Hi, everyone.
Welcome.
How's everyone doing? Yeah, welcome.
Welcome to another session of Live Trading Room. How are you doing, Alex?
I'm doing fine. We've got a really interesting topic today because we don't normally have a lot of ICT funded traders here. But today we are bringing in Alan again from last week. He was one of our giveaway winners, and he passed to the funded account using ICT concepts. So we're going to pick his brain a little bit. We're going to go through a couple of concepts. Everybody that is still waiting on their giveaway from yesterday, don't worry. I know I'm going to be in the background and I'm going to be sorting that out as well, because I know you guys are still waiting. And that is it. Tell us who's long euro. Tell us who's short. Tell us everything. We'll be pulling out questions and stuff as well from the comments. But what about you, Vic? What's going on? How are you doing?
I'm doing great. I'm happy about today. This is another day we can live our passion as traders.
Yeah.
We trade. That's our passion. So any other day I can trade, I get happy. So you can know that a weekday is a good day for me. Maybe we can revisit yesterday's gold trade, because for those who were watching yesterday's gold, we were analyzing it real time, and I indicated we identified an order block on the lower time frame that it's not picture perfect, but maybe I can share that. And
put it up.
For those who were present at that yesterday's session, I will have it here. Let me get my list out of the way. We identified. We identified. Let me see. We had identified previously, right? I left the structures in, even though they are already invalidated by now. But we identified this area as the supply zone. And Jonathan also, even though he has a different way of identifying supply and demand, he also had the same area, right? Not the exact same area, but it was the same general area. And that is before price was getting into that at the beginning of our session. And as price was penetrating this area, if we go to the 1 hour, we kept on seeing bullish order flow. And to me, that was the reason I never pulled the trigger, because the market didn't shift at that moment during our session yesterday. However, as it was going up, remember I mentioned that that 5-minute candle, this candle, and that is this candle. This, if you're buying gold, this was a very scary candle, right? It engulfed, and really it was very significant. Even after that moment, it went up. And what we had was, even though the order block didn't held as nicely as you would have expected, the fact is, though, it did form and it did function as a supply zone. And after that happened, market went after that candlestick, that engulfing that gave us this structure. It did not break structure right away, but went up and played and interacted with this order block. And afterwards, it went on to break that yellow horizontal line, which to me is the neckline of the quasi. And what happens afterwards is that the market kept on after breaking that neckline, it kept on moving even a little bit lower. But this is the point. At a certain moment, it came back to that entry order block, right? If you didn't get it here, because this was not the entry yet, since it hadn't broken the neckline yet. Let me get this. Let me get the tool right. Yes. At this moment, this immediate reaction or the immediate retest, it hadn't broken the neckline yet. So, but afterwards it did. And that would happen one time here, which was much later. And actually, in Asian session, it had a nice entry. Actually, this is at the end of the trading session, so I wouldn't know if that is a great area. I think it wouldn't be that great area to enter because of the spread. But here in Asian session, we had another entry, and at the same structure. And as you can see when you zoom out, the entry came at a time that I don't trade, but that is the best entry area for your move as it moves out. And as it moves out of this order block, right? This is the H4. What is the next area? What is the next TP? What is the next bullish structure that is going to react on? And you can see how market comes back to that and reacts nicely. So if I were in this trade, which I wasn't because the entry was in Asia, that would have been my TP. My TP would have been on that right here. That would be my TP. It would have hit it and it would be nice. And even now it's going much lower, but that's a very nice follow up on our setup from yesterday for those who were interested in how gold is moving. And it's only started. So that structure, even though if you look at the 4 hour, it had a close above it, right? So technically, it's no longer valid, this order block, but it did give you the area where it had a good chance. And actually, we had on Discord, after the YouTube session, we have the Discord where we go during a workshop and keep on analyzing the market. I we identified this area based on the H1 that would be very interesting to look for a reversal on the lower time frame, and that's exactly what happened. It doesn't happen all the ways this way, but this is what we do in the workshop on YouTube. On Discord, we continue in a more continue showing how we approach the market, and something other traders can learn from as well. So yeah, that's a follow up on yesterday's setup, Alex.
Super clean. Very, very clean. Really
Good.
like it.
Yeah, I like that.
Nice one.
I wish it would have happened during our session yesterday, because we could have an entry, but it happened in when I was asleep in Asian session. But that is okay. It doesn't matter. What's important is that we were able to see in advance, identify the value where we should be entering, and have a plan ready. If it doesn't, let's say it doesn't respect that level, it goes higher, you don't do anything. If your trading session, your working hours are over, of course you wouldn't be able to do anything. But having that process in place will allow you to be ready the next time that it does happen within your trading session, and you'll be one step ahead of everyone else who may not be as prepared.
Agreed. Well, I know a couple of people are long and short euro, and it's just playing around, not doing anything. So maybe soon we'll see a little bit of liquidity coming into the market. But it is really annoying, actually. But we're gonna bring on.
Yeah, it is. Yes, for sure. We have
what are you thinking on euro? What's your overall direction?
Well, the thing is, we have quite a big after NFP, we had this nice spike and big candle left behind. So we have a quite large area or range, I should say, that market will be playing from. And you could say this is the lower range of the whole area, and in between here it can do a lot of things without breaking structure, right? So as long as it doesn't break this, you could say it's still bullish because of all of this bullish price action. And what we now see is that it has, on a very tight area, on a tight section of this bigger range on a very tight, it's forming bearish H4, which are very powerful for an intraday trader, bearish H4 structures, and bullish one on a very, very tight area. So this is going to be perhaps an area we will be, playing along until it decides where to go, either on the upside or to the downside. So this is something you should be aware that, a breakout from this tiny area doesn't mean that it's going to be prolonged movement yet, because this is just expanding that range. That range is very, very tight. We're talking of only, let me see, that's only 22 pips. That's like 1/3 of what EU does typically on a day. So a breakout of that tight area is a good entry if everything else is in confluence, but it doesn't mean anything. It may be just expanding that area a little further. So it's tricky.
Indeed.
I think you need to watch out a little bit.
Yep. Well, we'll have to see what happens when the US opens. I've been long. I was long this morning and I got caught out on a couple. I am long again.
Okay.
But this will be my last pitch in this
Your last pitch?
particular trade. My last pitch, my last one.
Like
I've
baseball
had 2
pitch?
strikes. Yeah. I've had 2
Oh, I see.
strikes.
Okay.
Yeah, pitch. Yeah, it's you can tell I'm English. I've had 2 strikes. The third one I will be out, but we'll see what happens. I am long from on a 15-minute time frame. But anyway, we're gonna bring the one and the
Yes.
only. Hello, here he is, guys. There you go.
Hey guys,
How's
how
it
are
going,
you?
man? How you doing?
I'm great. How are you guys?
Yeah,
We're
not
fine.
bad.
Welcome.
Can you guys hear me?
Glad having
Not
you
sure if-
here.
Yeah,
Okay.
man. How you doing? How's everything going?
I'm doing fine. The market has been a little bit choppy today, but
Yeah, it's not really
good,
doing
we're
anything,
good,
is
we're
it?
good.
It's like there's that meme with the guy with the stick, and it's just like prodding it just to do something. That's
Yep.
what is I'm looking at. But the floor is yours. I'm actually going to be in the background. I'm actually going to be doing some stuff in the background, so I'll be on the comments and questions. So if you guys have got questions for Alan, then definitely write them down. And Victor, you can be devil's advocate and just ask those good questions that you normally do to get the most out of this.
Sure. So, Alan, how has been your trading lately? You've been looking at the trade through the market. I mean, through your strategy, and tell us what do you see right now in the market?
I was actually I was actually looking at gold this
Okay.
this New York session. I've been waiting for it since yesterday.
Okay.
Is it possible if I can share my screen?
Sure.
Yeah, go
Yes.
share your screen.
Please
your
do. I
thing.
was just going to
Do
ask
your
you.
thing.
Yeah.
Okay. Right. I'm not sure if you can see it right now. Okay.
Yes. Your screen is on.
All right.
Brilliant.
So as yesterday, as you all know, what I normally do is that, especially with gold, is a
Okay.
pair that really just likes running from liquidity to liquidity, literally. And I found myself in most cases where, like, especially if I want to swing trade, I'll be devastated with how it's moving. And I got to realize that, we're always going from liquidity to liquidity. As soon as we sweep a liquidity, expect a reversal. And then what I apply in my trading is that I apply the external liquidity and internal liquidity. So what that means is that I expect price to take out that external liquidity, which is the buy side or sell side liquidity, and then wait for price to actually reject off of that and then go into internal liquidity, which is the order block or a fair value gap. So in this case, yesterday we actually took out this buy side liquidity here, and then I was actually expecting price to actually give us some lower prices. And the reason why I was actually looking at this BC, this fair value gap right here, is because I would say it's kind of in a in a discount. Okay, actually kind of in a discount area. Let me just put it the other area around. I measured that swing low to the swing high. As you can see, we're just right below the 50% fib level. That's why I actually chose that fair value gap. So this is the H4. So what do I do with this is that I'm actually currently waiting for an entry on the 15-minute. And what I'm waiting for is just like a market structure shift with the fair value gap. And then once that fair value gap is rebalanced, that's when I'm actually considered to actually take that trade from there.
So basically, you're looking for a continuation, a reversal from halfway from the retracement, like after the retracement, a reversal for that continuation move, right?
I don't copy. What did you say? A continuation from?
What I see is that you have on gold we had from let's say Monday we had that move up, right? And then we're currently in a retracement, and you identified an area based on your structures that could be a good place that it reverses from and continues in the previous move, which is up.
Which is up, yes.
Okay, yeah. Nice. And so that market structure shift, how do you go about to find it? Like, what are you looking for?
Technically, this is what I'm looking for. If we are okay, let's just say it's just okay. Why is it okay? So technically, I'm expecting lower prices. I don't know why it's putting the thingy lower prices. And then what I'm looking for is price to actually make a high, and then eventually maybe go and break that swing high that it made, and then hoping to get like a inversion fair value gap in between that market structure shift. And then once price rebalances that, I would be happy to actually look for an
entry
buy from. Okay, I don't know what's happening with my keyboard, but yeah,
I have that all the time. Don't worry, man. I have
retest continuation right there.
That's breaking retest right there. Breaking retest. What's up, guys? I am back.
Hey, Jonathan.
I got my coffee roasting machine. Can I open up that?
This guy with his cigars and his coffee. You're living too good. You're living too good.
Ooh, I had a really good cigar this weekend. Davidoff. Yeah, sorry guys. What's up, Alan? How you doing?
I am great. I am doing great.
Nice to have you on here again. So we're talking about ICT concepts.
You've jumped in the middle of the whole. He's going through the concept.
All right, so I'm interrupting everything.
You're breaking the flow, man.
I'm so sorry about that, but that's
smoking cigars, roasting coffee. We're in the middle of a break and retest ICT style.
Yeah. All right. I'm just so eager to I'm gonna mute the mic. Go ahead, Alan.
Yeah, I'm muting it.
All right. So yeah, with that being said, switching from the H4, normally this is what I do. If I'm looking at for example, if I'm looking at the monthly time frame, if I identify a PD array on the monthly time frame, for entry, I would switch back to the daily, right? And then if I'm looking at the weekly, I'd actually switch back to the H4. And then if I'm looking at the daily, I would switch back to the H1. And then if I'm looking at the H4, I'll switch to the 15 minutes. And then so with the H1, go to the 5 minutes. And then list is M15, which I actually shoot to the 1 minute. So what does that mean is that if I identify, for example, here, I actually identified this this fair value gap on a 15-minute. Buy side has been taken out, swept here, and then price went from external liquidity to internal. And then what do I do with that is that I actually switch to the 15-minute time frame to actually look for that market structure shift that I initially was talking about before Alex came in. Yeah.
So basically, what you're saying is the higher time frame. That is the reason you're identified this certain area, that area point of interest, and then you go to the lower time frame, which is depending on which bigger time frame you identify that area. You go to a specific time frame, not any other, a specific one where you look for that market structure shift.
Yes, that's what I do. Yeah. And with this trade is that,
like right now, that you have buy ISI, BISI. What does that mean?
Buy side imbalance, sell side inefficiency. Technically, it's just a bullish fair value gap.
Okay.
Yeah.
And that is your point of interest. That is the area you expect the market to reverse.
Yes, that is my point of interest. Yes. And then what I like about it is that prices tapped into that fair value gap, that H4 fair value gap, right after we actually took out the London low. And that's one of the confirmation that I actually look for, especially if I'm in the London session. I wait for London low to be swept or Asia high to be Asia low to be swept or Asia high to be swept, then consider taking a trade from there. And then in this case, we actually took out London low, which I'm expecting price actually reject off of that, which makes it more interesting because we're in a H4 fair value gap. So I'm expecting price actually reject off of that and then take out the London and also the Asia. But obviously looking at the higher time frame, I'm expecting price to take out buy side liquidity. So that is my next draw in liquidity.
Yeah.
That is my next draw in liquidity.
And when you identify, you just said you identified you expect that it will take the London high, right? London high and another high you mentioned. Which one was it?
Well, that's the Asia high.
Asia high. Okay, so yes. London and Asia high. When you have two different expectation, how do you go about choosing one of them? Do we have a rule or?
Well, normally depends on which session I'm in. In most cases, right now I'm in the New York session, so what I'll target is the London high, right? And then if I'm trading the London session, and then we took out the Asia low, if I find an entry, what I'll target is the Asia high. So right now that we're in the London, we're in the New York, my target is the London high.
So you basically are targeting the high of the previous session.
Yeah.
Yeah. And when you identify, as you mentioned, that you also have on the higher time frame, you expect like a continuation move to much higher. How do you manage that? Do you leave everything for the higher time frame target, or do you partial out? How do you decide when to leave something on, or what do you do in those cases?
It depends if I actually wanna just take like the intra-session trade, if I just wanna go in and out before maybe the right now in the AM session before the PM session, or if I just want to actually just swing it just to take that out, that's when I'll actually take what is this? Or in most cases, what I would do is that I'll take my partials. For example, if I am targeting, let's just say I enter here, get a confirmation, TP right there, and then maybe just SL below here. And when I take the trade and then prices get there, what I'll do is just I take my partials, maybe 70% of my trades, and then hold the rest and lock profits, and then hoping to hit that buy side liquidity that I highlighted up there.
All right. So you take if you have enough reason to hold it as a swing trader, you take off 70%. You said basically 50% most or 70%.
Yeah, basically most of it. Yeah.
Okay.
It's 50% or half. Yeah.
And do
sorry?
you trail your trade like afterwards, or do you leave it? How do you manage that?
I actually trail my stop losses after that. What I normally do, for example, if this, let's just say this is my trade, right? And then
Mm-hmm.
as soon as price go maybe 50% of 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 plays out 50% to my target, what I normally do is I lock profits. I make sure that I trail my my stop losses to break even, and then when we hit TP,
Mm-hmm.
in most cases it's either I close 70% of my trades and
Mm-hmm.
then break even. I mean,
Mm-hmm.
it's either I just leave the SL at break even or I put it at the 50% of the whole trade and then just let it run.
Nice, nice, nice,
Yes.
nice. I like that. I like that how you have a different approach with your stop loss based on how the trade is going, right? It's not
Yeah.
fixed. You have to hit your TP first. You're listening to the market, having it confirming you that that is the idea before you move your stop loss. I like that.
Yes. Yeah, because you
That's
should
very
remember
great, man.
profit partials is profits. So
I
why
agree.
not
I agree
take some
completely.
partials? Yeah.
Actually, we all like to, hit those home runs and hit it
Yeah.
from one time and have it run for hours or even days. But I think those trades don't come very often, at least not in my experience. And taking partials is a great way to capture the move because it doesn't always run as far as the best case scenario. And if it doesn't, you already are in profit, and you're maintaining your psychology because stop losses are, once you have your partial taken, you are more able to handle the trade easily. Like in my example, I sleep better when I have to take partials at the end of the day,
Yeah.
because if I leave it open, it messes with my psychology. I cannot, I don't sleep well because I'm always pending what is the market doing. um,
Yeah.
so yeah, that's very good, man. Very, very good. And how do you manage, like, what is your win percentage or win rate, um, typically when you trade this way?
Um, my win rate, I wouldn't say I have actually calculated all my trading and also managed to see how many trades I've taken which were losses and how many trades which were winning. I can still do that. I have a record of everything, but it'll take me some time to actually come up with a specific percentage. But I would say that I'm like, in most cases, I would say out of maybe 10 of the trades that I
Mm-hmm.
actually take, maybe I'll get like maybe a clean six. A
All right,
clean
so a little
six, I
bit
would
more
say that.
than a little bit more
Yeah,
than half your trades.
Yeah,
a
in
little bit
your
more
in
than
your
half.
in your in your boot camp account, you had it roughly around about 40 to 50%.
40 something. Yeah,
Yeah,
somewhere there.
40
Yeah.
something, and then it was I think around about 1 to 3 risk to reward ratio. So that makes you very profitable having a RR of 1 to 3 with a over 40% risk win rate.
Yeah.
Definitely
Because even
Nice, nice.
makes you profitable.
yeah, because with that type of, for example, here, if I'm having 1:3, uh I can literally, well, if you can literally, some people have a different point of view. I realize that people have actually point of view when it comes to risk to reward. Some people have actually like a negative risk reward, which is actually working out for them, surprisingly.
Yeah.
And yeah, I feel like with this, if you're always aiming for 1:2 or 1:3, and then most of your setup allows you to have that, even if you can take like 10 trades and maybe lose around about maybe 6 of them, some way somehow I think you'll still be in profits, because you're just
Yeah, yeah,
risking, you're just risking 1% for 3% for reward, so some way somehow you still be in profit.
yeah. Actually, the example you gave, where you lose 6 out of 10, meaning that you're winning 4, right? And if your
Yes.
risk reward is 1 to 3, those 4 will actually produce 12 R profit, and the 6 that you lost will still, when you deduct those 6 losses, you still are 6 in profit net. And divide that by 10 means that you're getting 0.6 R per trade, which is a very, very nice result for sure.
Yeah.
An expectancy of 0.6 is very great, and actually that is if you have it at 40%. But you mentioned you have it above 50, close to 60, and if you count that, you're actually the average of your expectancy. If I calculate it quickly, that would be over around 1.4 R per trade expectancy. That is amazingly well, man. Wow, good for you. That is amazing.
Yeah, it's impressive. You can't say that ICT doesn't work.
No, for sure. For sure.
So yeah, that's what there's two ways that I would actually trade. Obviously, one is trading with the directional bias, and then another one is just trading without the directional bias. You don't have to know whether we're in an uptrend or a downtrend. Which obviously, in that case, it's gonna cost you to take more trades, and obviously more trades meaning, you might be in a case where maybe a week, you might find a trade every single day, but that doesn't mean it'll play out every single day. So that's two ways that I trade. This is the way. Obviously, looking at the higher time frame, PD arrays, applying my IPTA data. Obviously, if I want to swing trade, that's when I go all the way from use my daily and H4 and the weekly. And then when I'm intra-session trading, for example, the London session, what I do is that I start with, for example, I just switch to the, let me just do this. This is what I normally trade, especially during the London session, not implying the directional bias. I can use the directional bias to increase my chances of being in the right direction. But normally what I do is that I just hop into the market and then identify my Asia high and my Asia low, which is for me is between 6 p.m. and midnight, obviously New York time. That's my Asia. This is my Asia range. And then what I do with that is that I wait for either buy side to be swept or sell side to be swept. Buy side of Asia or low of Asia. And then in this case, the first one that I actually swept was the Asia low. And then I wait for my kill zone, which is from 2 a.m. And then from that's when I actually switch to the 1 minute chart and look for that market structure shift with the inversion fair value gap. So,
and when you say 2 a.m., is that New York time?
That is New York time. I always make sure that my time frame is always set to New York time.
I see.
Because if you change it to any other,
go ahead.
If you change it to any other time zone, it might, because now you always have to convert to the, maybe you're using your local time, you always have to convert to your local time. And then when the daylight saving kicks in, you might be a little bit confused, might be a little bit hour early or an hour late. So it's always best.
Okay, but when there's daylight saving switching, do you still stick to New York no matter what your local time?
No, yeah, I always stick to New York, so I don't get confused when I get into the market, because 2 a.m. is always 2 a.m., right? Even though it might be a little bit an hour in my local time, an hour ahead or hour behind.
Behind, yeah.
I know that whenever I look into the chart, the time always stays the same.
Nice, man. Yeah. And you mentioned when when price makes a sweep, right? Is that what ICT means by manipulation?
When you say? You said?
You mentioned that you identify at the beginning of your trading session when you come in to do your trading desk, and you have that indicator that indicates the high and the low of the previous session, right? And
Yes.
and you wait for that lows or that high to be taken out, to be swept.
Yes.
Is that sweeping? Is that what they mean by manipulation?
Well, technically, well, yeah. The reason why I use this model is that normally there's what's called AMD, which is accumulation, manipulation, and distribution, right?
Okay.
So what that happened is that the market has tendencies of accumulating, especially if you're looking at the Euro USD, because it's very quiet during the Asia session. And then what you would expect from that is for a manipulation, a fake out, right? Probably into like a higher higher time frame PDRA. Let's just say here it's a 15-minute favorably gap, right? And then maybe it's a uptrend, and then we came like this. It's a 5-minute 15-minute chart, and then what you'd expect is price to make that fake out, breaking that Asia low into that higher time frame PDRA, and then what would happen is that price would reject offer from that and then distribute. So this is the accumulation, manipulation, tricking people into the false move, and then it distributes to the opposite direction. So using that's what I use on the London session. And also the London session mostly, in most cases, creates the high of the day or the low of the day. So in that case, especially if we're in an uptrend, for example, let me just try to go to a daily time frame. Okay. Let me just go to a daily time frame. So in the London, what you're chasing is, for example, this downtrend here, all these candlesticks here. So what you're chasing, what you want to catch is to enter. If you want to sell, prices at that discount. As prices opened here, it went a little bit higher. That's the discount for the day. That's where you want to actually catch that move. That's when you want to sell. So that's technically what you're looking for during the London session. That mostly happened during the London session. Asia session comes in and then accumulates a little bit, and then London gives it a high of the day, which gives you a deeper premium price to actually sell off from. And then that's what you do. The same thing here. You wait for price to create that high of the day during London session, and then you sell it off. Same thing here. Price created the high of the day during London session. Mostly you can get it during London session, and then you sell it off. So that's technically what I am looking for during the London session when I use that model. Accumulation.
So basically you're trying to you have it in your mind that you want to be, let's say, on a higher time frame, the daily, where you have that strong move to the downside and price is now retracing. You're trying to catch that area that will become a wick at the end of the day, because it will come lower and you'll be entering in that wick there, which is not a wick yet, but you expect it to be a wick later.
Yeah.
Yeah.
That's technically what I am looking for. Yeah. Especially in a
nice.
trending market, especially if you're applying obviously directional buys, and what you'd hope, for example, during this Asia session here, if we're in an uptrend, what you would want is price, like what's happening right now on Euro USD. Obviously, this is it's a market replay. You would want price to make that low, which is a discount, which will probably get it. A discount is after the true opening session. I mean, the midnight session, right?
I see.
So on
Because
the midnight,
you mentioned discount and premium. Correct me or actually I don't know very much about it. Is premium always up, or can it be depending on your long or side? Long or selling the market, or is premium always up and discount always below, or how should I be looking at it?
Yeah, this premium is always up, and then discount is always okay. okay, let me just premium just technically means higher prices, expensive. The prices are expensive, and then discount means prices are cheaper. For example,
But
if you wanna
but
sell,
yeah, but at that cheaper and more expensive, that's regardless of whether you want to be a buyer or a seller, or doesn't matter if you're selling. Let's say, because if you're selling, the price is more beneficial when it's higher, of course, because then you get a better entry. Or does that the premium switch, as you said? But you mentioned it always is on the higher side, right? The premium PD.
I see
let me
in the
just do this.
chat that people talk about the 50% fib. I don't know if it's correct, but discount is always above 50.
Above
so
50, yeah.
Okay.
For example, if
yeah,
Alex, you want to say something?
I see a lot of people asking about the indicator. He's muted. Let him be muted. It's okay. What indicator are you? I'm not. This might have been brought up, but we see a lot of people in the comments asking about the indicator that you're using for the sessions. I can see right there. It says, "Is it a free indicator?"
Yeah, I think it should. I don't remember how I actually got this indicator, but I think you should be able to just
sessions liquidity tracker. I'll see if I can find it, and if I find it, I will post a link in the.
We have it now in screen. Session range highs and lows liquidity tracker by SM Julian, with about 5,887 ads. So that's the one that Alan is using, guys. For those who want to be not copying, but I mean, want to try this way of approaching the market as well.
Yeah, I mean, like you don't really need the indicator. I just it just makes I don't have to draw my.
Oh no, I think
makes
it's
it
great.
easier.
Yeah, I think
makes
that indicator is great.
Yeah. I think you
just
you have to keep
yourself.
Yeah, you could do it yourself all the time, but it makes it one step less to do, and keeping trading simple as possible. I think is you will reap the benefits of it, because you have more mental space to do other stuff.
Yeah, it can be helpful.
Nice.
So yeah.
Okay.
And regarding the discount and premium, is that whenever you want to buy, obviously you want to buy low, and then whenever you want to sell, you would want to sell low. For example, if you actually wanted to sell this Euro USD right here, you don't want to sell right now at this lower prices. You'd want to have some sort of a premium price, right, which is higher prices. So if, for example, let's just this swing here, and that if you're measuring this swing low and that swing high there, you'd want to sell anywhere above this 50%. So anywhere, whenever we tap in above that 50%, that's premium price. That's where you should be looking for forward to sell. And then if you want looking for that premium PD array, which is obviously this fair value gap here, so that's where you want to sell. So obviously you just wait for that prices to go there if you want to sell, and then set it off from there. And then vice versa, if you want to buy, you would want to buy at a discount price, which is right now we're currently in I would say.
And for those viewers who are asking themselves, what do you use for that retracement tool? Is that the usual Fibonacci tool?
You can just
usually Fibonacci, and you take off the other values, right? You just put 0, 1, and 50%. Exactly. Nice.
Yeah. So this is what I focus on.
I see you put in 79. What is that value? Does it have a specific meaning for you? Is that something you use a lot?
This is what what ICT calls I said we, but this is what ICT calls an OTE setup. It's an optimum trading entry. Yeah, Optimum
Okay,
trading
but
entry, which is
go ahead.
said,
Go ahead.
yeah, which is Optimum trading entry. For example, if you wanna sell this gold, what you'd want to do is that if you wanna get that cheaper price, or that OTE setup, is that you wanna focus between the 71 and the 79, and then looking at this exactly at that price, we happen to have a fair value gap.
Nice.
A fair value gap. So that is what we call the OTE. And then if you want to
Nice.
sell, if you want to down a trend, and then that's where you should be looking forward to actually sell.
And this, what is the name of this model? Because this is the model you chose from all those 100 and some models that ICT offers or teaches. What is the name of this particular model?
What is the name of this model? Is the OTE, it's the optimum trading entry. I feel like
Okay.
This is
it's
the
just like
Allen model, my friends.
Allen
This
model.
is
Yeah,
Allen's
I
model.
like that.
Allen's ICT model.
I like that.
It's the OTE model. I would say it's the OTE model.
I see.
Yeah.
I see. And
Yeah,
do
somebody
you?
actually commented that too on the chat. I just saw it pop up.
Nice. Besides this model, have you focused and specialized on this one, or do you employ other models as well, or have you been looking in the past at other models? What have you done so far in terms of the other models?
There's I mean, like, there's a lot of models that I actually implement into my trading, just like the IPTA data. I use the IPTA data especially for directional bias, and let me just say swing trading, long-term trading, right? It kind of helps me with this is the I use this as this is actually not April, is the May open. So I just use this as
Yes.
it's also one of the models that I actually use, especially if you're swing
Okay.
trading. And what does it mean is that you have this 20 days look back, 40 days look back, and 60 days look back. So what technically means is that it's a time-based liquidity, right? The market
see.
tends to take old highs and old lows depending on the time base, like I said. So with that being said, this is a 20 days look back. So I always change that on the 1st of every month. So therefore, this is the 1st of May. This candlestick is the 1st of May. And then what I do is that I measure that back. Obviously, that I always make sure that I'm on the daily time frame. Always make sure that I'm on the daily time frame, and then I measure the 20 candles. As you can see, that says 20 candles, and then I put a vertical line, go to 40 candles, put a vertical line, and then go to 60 candles, and then I put a vertical line, and I also do a 20 days look forward. So I put a vertical line on the 20 days after what I'm projecting for the next month or so. And then what I do is that I highlight the highs of that day, which is the 20 days low high. There we have it. Then there's a 20 days low, 40 days low there, 40 days high, 60 and 60 days low there. So with that information, what I use it is that especially now that we opened here and then we're currently in a premium for the month, right? The month opened here and then we're currently in a premium. What I would have liked to see, what I've liked to see on the EURUSD is to actually dip a little bit below to actually give us premium price for the month. And then if I want to swing trade it, I'll swing trade it to the 20 days high. There we have the 20 days high. So that's, to me, that's the next drawn liquidity. So for the next month, I should expect price to take out that 20 days high. That's how I use this.
And these levels, you maintain them for the coming 20 sessions. In other words, this month, right?
Yeah, the 20 days. Yeah.
Yeah. So and so every month you reset those levels and you put in new levels.
Yeah, every month you can just reset them, or you can just do like most people would do like here's a 20 days, and then they do like a 40 days look forward, and then 60 days look forward. So you can just have that for the rest of the 1, 2, 3 months, and then you just see how that actually plays out. But what I do is that I
Nice.
reset it every month. I reset it every month, and then just
Every month.
adjust
Yeah.
my,
Yeah.
yeah,
So that
adjust my,
process you just mentioned that you on the first day of the month you go back all these fixed number of days periods and you put in the highs and the lows. That this is what you do at the beginning of every month, and
yeah,
you use those levels as targets or liquidity draw as you call them, right?
yeah.
Yeah, yeah. Someone in the chats mentioned quarterly theory. So is this
Yeah.
what they mentioned by quarterly theory? What you just mentioned, or is that something else?
Uh, yeah. It actually, yeah, it also applies. It also applies to that quarterly theory. Because what I understand about quarterly theory is that, like I said, the AMD, accumulation, manipulation, distribution, and the X, which is the continuation of the distribution. So if you actually divide your year into 4,
Yeah.
you should have, in most cases, if you can identify the accumulation month,
Mm-hmm.
you would know what the rest of the 3 quarters would actually provide you with. So if you can,
Wow.
maybe for the first quarter, uh, if you can identify the first quarter as the accumulation, you know that the next one will be a manipulating, dragging people into the false movement, and then the third one can be the distribution, and then the fourth one can be a continuation of the distribution.
I mean, if you're able to know in advance what the whole quarter will be doing, most likely, that is some powerful stuff, man.
Yeah.
I think I should be looking more into ICT stuff. What do you think, Jonathan? Should we start following ICT and doing the mentorship as well? Because I mean,
Okay,
if you
that's it. I'm
can,
gonna have to get rid of Victor from the stream, guys. I do apologize, but
Did Victor? Did you say?
we,
Sorry, Victor. Did you say something?
yeah, I didn't know be quiet here. What
Man, I
was that?
love this coffee. This is some really good coffee.
Good stuff. Good stuff,
Maybe it's
Alan.
just supermarket coffee. But I'm definitely gonna look into this quarterly theory stuff because it does seems
You
quite.
don't sound
It seems
convincing.
quite
You don't sound
It,
convincing.
no, I can understand. The start of the end of the year, people are trying to, they're going into the new year. We'll try and rebalance books and things like that. So I can understand if banks or institutes they want to rebalance all of their assets and things like that. So I can, I'm gonna have to look into it. It looks interesting.
We can definitely. I mean, we can definitely test the idea. It would be fairly easy to.
How much
easy
back
to
testing have
test.
you got on all of these theories, Alan?
Especially with the London session, because I only started trading ICT last year. So far, I think I've probably have like 2 to 3 years worth of data, I would say, just back testing every year. I'm already done with 2023 last year, and I wanna go back to I wanna do 2022 also and 2021, and then just
Nice.
keep doing that, and also just forward testing too. So yeah.
Nice, nice. I see. I hear someone who is based on data, and I think that is a great example for everyone. Go back to your data. Get you're not talking about a month, even 2 3 months. You're talking about years. You've done your 23 back testing, going to 22. I mean, that's shows that you are doing the work. So yeah, that is when you know what you're talking about because you have data supporting your model, your strategy, your system. Yeah, that's very good example.
I think and you're probably going to notice this as well when you start backtesting, you're getting into like the COVID period. You're going to see that things kind of, at least that was what I saw when I was trading through that period. So I saw like 2018, 2019 was had my trades were really easy to predict, and then during COVID, like the whole markets, like everything had changed, and now we're kind of like back at where we were pre-COVID, or at least more like it. So I think backtesting, if it would be like one thing I would recommend, maybe not to you, but to people watching this and thinking about backtesting, maybe don't backtest 2003 and then 2002. Maybe backtest 2017 and then 19 and then 22, and kind of jump back and forth to get a feeling for how this system works during different years and different market cycles. Because if you're if you're getting funded and you're trading and you want to be a trader, you're not going to be a trader for 2 years. You're going to be a trader for 15 years, right? So you want to make sure that what you're actually trading is working over a long period of time. And honestly, the system that most of you are trading now is probably not going to work in 10 years. There is a big chance that the way that you're trading now is not going to work. The way I traded in 2018 is not the way I trade today, because that system that I traded in 2018 basically became unprofitable. So I think it's very it's important to realize that you need to be very, very flexible, and backtesting definitely gives you clues on how that shift looks like.
Yeah. The strategy I used to use, which was throw a dart at a board for crypto, and it just had 100% win rate. It's absolutely amazing.
Really
doesn't work
good
anymore.
In 2017, my best strategy to date in 2017 was logging into Bittrex, seeing every coin that was up like 400 or 500%. I moved all of my portfolio into that coin, and then it continued to rally 500%, and I sold. And it worked. It worked very well, actually. And obviously, that doesn't work very well today. I never backtested that.
The good old days.
The good old days. The wild west of the crypto world. That's crazy time.
Yeah.
All right,
like
Alan.
You said, Jonathan, especially about backtesting, I would recommend everybody backtest. They say, I heard this quote one. That's actually what made me want to like just keep backtesting. I was like, if you don't backtest, just add another 3 years to your trading journey.
That's a good one. Yeah. It's a good one.
I was like, okay.
I think, But backtesting is good for a lot of different reasons. I mean, obviously you want to backtest because you want statistics and proof of your system, but backtesting is also good because you can kind of regulate your emotional balance by backtesting regularly as well. I mean, if you're in a drawdown and you backtest, you can easily remind yourself of the profitability of the system. It will make it easy for you to survive that drawdown mentally if you know that your system is overall profitable, but you're just in a drawdown. So I think backtesting is something everyone should be doing. Everyone should be backtesting.
For sure.
All right.
For sure.
We're coming up to an hour here, Alan. Is there anything?
Should we have a quick break after?
Well, if you want to break, let's do a break.
Straight in. Unless you want to go straight in.
we can go straight in.
Okay.
Victor, if you want to take a break, then by all means, you can take a break. I think you did an amazing job here. You completely took control of the interview here.
No problem. My pleasure.
Asked everything I was thinking about asking. Alan, where can we
find you?
Get more content from you? Where can we find you? Where can we follow you?
I do live stream every single day during the London session. My channel name is just in my name, Nas Assassins FX, and I also have a Telegram channel where I actually drop in some free knowledge.
Signals.
Can I ask you a question? Do you trade NAS?
I actually do trade NAS.
You do.
I do trade NAS, especially during the New York session like this.
Nice.
Yeah,
Awesome.
Good to
yeah.
have you on. Hopefully we can, when we do, open up the London session, maybe we'll bring you on for live trading for the London session, mate. Thank you
Yeah,
very
that
much.
would be cool.
Yeah, very
Yeah.
nice.
All right, take care. Take care, Alan. We will hopefully we'll see you again, and everyone knows where to find him.
Fine.
We will provide all the links in the description as well. I will add that after the live stream. All right, Alan. Take care.
Thank you, Alan. All those good
Thank you.
insights. Thank you. We appreciate it.
Thank you.
So that's
All
the
right,
screen.
people.
Yeah, okay,
Don't forget to hit the like button.
I see that Alex is trying to manage the stream here.
Okay,
All
I'm not
over
going to
the
manage
place.
anything because it's literally not working.
But
do you
guys,
wanna
don't
let's
forget
get-
to hit
we got a
the
question.
like button.
We get a question. Straight into what? Straight into the market. Straight into the
Making
profits.
money.
Let's
Yes.
go. Let's go.
Actually, I'm in a bit of drawdown.
Well-
I'm joking. I'm actually in a bit of profit, but that's only getting back the money that I already lost from earlier. But let's jump into.
I'm
to
in
some
a
chart.
short on the American dollar versus the Canadian. Canadian? This is not the Canadian. This is the Swiss franc. Yes.
Like it.
And I'm also in a long on CAD CHF.
Oh.
I'm hoping that one of these are going to get stopped out. All right, because I'm short USD CHF here. I'm long CAD CHF here. So one of them are most likely going to get stopped out because honestly, like the American dollar and the Canadian dollar, it's like what's good for Canada is probably good for America. So I'm guessing,
America.
yeah. Yeah, well, I'm shorting America, so I guess.
Oh,
Yeah, it is what it is. Shorting America here, going along Europe. It is what it is.
I really like that. Really like that as a short.
Not-
It's a really nice short.
I'm not hedging. I'm just diversifying. Is it okay if I move myself up so that your face is behind the comments? Let us know in the
Yep.
comments if you would rather look at my. No, don't answer that. Don't answer that.
No, I actually want to know whose face do you want to see more. You can either have my face or you can have Jonathan's face, and then tomorrow we will swap.
If you say me, I'll get you some coffee.
Ooh.
Roasted coffee?
Coffee friends.
God damn it.
Mere
Ah.
friends. There you go. So Euro, I've been chopped up.
Okay, we got
a
one
little
for Alex, one for Jonathan, one for Saul.
Saul's
Okay.
not here.
Saul's not here.
So
But
actually,
that's,
Victor kind of went
Alex.
through this.
Alex, everyone's looking like that's a
Oh, they
John
want to see
likes
my
John.
face. Ooh.
yeah. It looks like they want
buddy.
to see Alan. I don't want to see Alan. Okay. Okay. So now, this.
Oh, you.
Let me switch to my. All right. So
Sorry.
now we're looking at USD CHF, and so, guys, something that I do quite often is what quite often I do it every weekend. So every weekend, got my weekly analysis going, and it's this has like. I remember I posted on Twitter. I said like I did a monthly trade journal review, and I posted on Twitter saying that one of my most important thing last month in April was every weekend I spent 1 hour going through the markets, going through my watch list, and carefully planning all my trades. And I had one follower. He's been with me since like he's been long-term follower, and he's been in my community and everything. And he said basically like when I post weekly trade planning and do it in a structured way, the trades that we've taken together, he's almost always had a profitable month when I did that, right? And it was such a good confirmation that this is what I need to be doing. And if you look at USD CHF, the plan here is just so simple. I remember I've been looking at this for quite a few weeks. In the beginning of April, we did hit this weekly resistance area, and I've just been waiting for rejection, right? I've been waiting for rejection because I know that this is a very strong resistance area, and it should it should act as resistance, or it should break out and then kind of reclaim it for a move higher. So the idea was basically either short a rejection or go long and break and retest the upside. Very, very simple. And then going to the daily, what we see here is a decent-ish reaction, right? It kind of like comes up, fake out, and then moves lower. And on the 4 hour, look at that. That is that's a textbook break and retest of these lows. So this is not the rejection that I was looking at on the weekly. And then for a target on this level is basically the 0.618 here, confluent with support. So I'm kind of front running that level. A very simple setup, very, very easy to execute. All I did was look at the weekly, find resistance, decide that I want to go short, and then look at the 4 hour for that breakup structure. And you got to be very patient because it enters this zone on the 10th of April. So adding a level here, you see that unless we have a 4 hour candle closing below this level, there's no confirmation of this trade. That happened on the 3rd of May, and that's when I got the alert. So looking at the high time frames, planning the trades in detail, and just setting alerts to alert me on when it's time to execute. Same thing with CAD CHF. Now this is a little bit different, but what we're seeing here is basically a what I would say like this. You have this uptrend, right? You can kind of see how you have this sort of uptrend. Now, yes, you have equal highs here, so I would say that there's signs of this trend ending, but what you have now is you have very clear signs of a range, which is right here. And usually what I like to do is when we have a range like this, I'd like to go long at range lows for a move up to range highs. Very, very simple. And in this case, because I'm already short USD CHF and I'm looking for a long on CAD CHF, they are very correlated. I've decided to split the risk up between these two. So, 50% risk on CAD CHF and 50% risk on USD CHF. And this trade is based on the fact that we had a move down into the range lows area support, and then we had a low time frame break and retest. So we have a kind of like a change of structure. This is sort of the break and retest that I'm looking at. So we get a break, we get a retest, and then it continues higher. And I'm thinking that this is the move that's gonna take us to the range high. Now that I'm looking at this trade and I'm explaining it, USD CHF is actually a much better trade than CAD CHF. But we have a similar type of trade on Euro JPY. Look at that break and retest. This is absolutely perfect. So we have a daily level right here. And my idea was all along when watching this on the weekend, a break and a retest. That's a perfect level on a daily. We can add the fibs here as well, and you'll see that the reload zone comes in absolutely perfectly on that retest right there. And then we switch to the 4 hour. Now I actually didn't get in on this trade, but you can see that the idea is very similar. Just price comes down, hits a high time frame level, and then you look for entries on the lower time frames. Another one is GBP USD. I'm looking at entering this one. If we look at the daily, there's one good reason not to enter this, because if you look at this on the daily, you see that it's very clearly resistance. We haven't really been able to get above this area. But looking at the 4 hour, it kind of looks like if we can get above this level, actually, you know what? This is a terrible trade. I'm just going to remove that. That's not an idea that I'm willing to take. So let's move that down.
No, it's a good trade.
I think that's a terrible trade.
Really?
Yeah, look, it depends. Like, look at the daily. This is just...
to
me, I have a feeling that it's going to go up, but there's so many times, I enter... There's no confirmation here on the daily. We still have resistance. And look at gold, guys. Look at gold. Remember I talked about gold yesterday, how I can't go long on gold at resistance. Well, where are we trading on gold right now? Remember the lines I drew yesterday. These are the lines I drew yesterday. I said, I think we're going lower. I'm not sure where we're going to get rejected, but we're most likely going lower. And this is the problem with trading. We talked about how technical analysis is simple, but trading is difficult, right? Now, predicting that gold is going to get rejected somewhere in this area is very simple. And if for a bounce to happen somewhere here, it's also very simple. But how can we execute on that idea? Remember how I shorted this level and I got stopped out yesterday, and now, you know, we're getting that rejection. So I think it's these types of move and the way that gold kind of had that fake out, it makes I kind of think about that when I look at GBP USD, and the fact that yes, on the 4 hour it kind of looks good, but then on the daily we're still at that resistance, and I'm very, very hesitant to
Gotta pick your poison.
Yeah.
What's the idea and where's your stop loss? That's all.
Henry said that Victor just went over the gold trade.
Mhm.
Did you talk about that in the beginning maybe?
Yep.
Yes, I did. At the beginning, I had a follow-up on gold, how it reacted. Remember the 5-minute horrible candle, if you were long, that we saw? Maybe I can show that on the screen again. Let me check the screen. I'll put my chart on. We had, this is what I talked about. Remember yesterday we saw this candle. If I have a arrow put in this, there we go, this horrible, I mean, if you were short, it wouldn't be horrible, of course, but that candle that engulfed three bodies, three previous bodies, as it was breaking out of that supply area. And I said, well, this could be the beginning of a move down. And it at that moment it hadn't broken the neckline yet. But afterwards, it did break it, and we did have a retest. We did not reach that area, not a retest, but in Asian, we did have a retest of the same structure it left behind that caused that move. So that was the place. And actually, in the Discord group, I identified this whole H1 order block as being the sign that it wants to, if the market, how the market behaved within this area when it comes back to it, because it was coming back to it. If you look at the 1 hour, let's look at it on the 1 hour. This is the move. Let me see. This is the move that we saw, and it was coming back to the 1 hour. This is the order block, and even though it was squeezing the H4 by quite a lot, it did come in Asian session to that area. And that was the best area for that move, right? It formed the order block, right, on the H1, came back to that H1, but also to the initial on the 5-minute, what the ignition or the source of that selling pressure to then move away. So I was waiting for this area that didn't happen within our session yesterday on YouTube, but it did happen on the Asian session, and that's what I talked about at the beginning of this YouTube stream. And it went to the next structure on the H2, right? That's the FTA. There was nothing else. Well, there was this, but this was within the area it was moving out of. But once it started moving away from this whole area, this was the FTA, and that's exactly what it did. Went to that H2 order block and formed that engulfing, telling me it is rejecting that H2. And now it seems to be going nicely to the upside, and perhaps now continue to the next structure being this H4 order block bearish structure, of course. So that's very nice. I mean, this TA, this PA is very clean to me. Even though I didn't get an entry within my session, to me it tells me when your narrative is confirmed by future price action, that gives you confidence that you are reading the market well, and that your trade, whether you took it or not, your trade would have worked most likely favorably.
You know, you talked about that 5-minute candle. It's I mean that was in the beginning of that low time frame range. Does that matter? Yeah, I mean that candle, does that matter? I mean, does that have any significant? I mean, if you look at how long it took for price to actually break down and start that move to the downside. I'm not talking about the very low, like I'm talking about the that candle. Yes, I'm talking about the candle that we talked about yesterday, but
this one?
but it formed a range after, right? So you had a fairly big range after. And what I'm saying is, does that candle have anything to do with price actually moving lower? Because I can see lots of other strong, bearish candle within that range.
Well, it is. I wouldn't say the candle in itself is the reason the market moved lower. But what I see is it's a refinement structure, because the structure that if we only had that 5-minute structure and nothing on any other time frame, then that 5-minute is not confirmed or not supported by anything else, and that would make it significant. But the fact is that after we formed, to me it was significant because market was trying to break out, and it had a very strong, if you were in that trade, imagine you being there, you're buying that as it is breaking out, and the market slams you down, puts you in a lot of in drawdown, and never came back. So to me, that's a sign that there were people in that trade buying that breakout that were in pain. And so the next time it comes back to that area, they want to be out of their pain. So they want to be selling. They want to, forget about it and close the position at BE when the price comes back. That's one thing, but that is only on the 1 minute, on the 5-minute. What made it more significant was that it formed from that point there, it formed an engulfing on the H1. So it confirms not only on the 5-minute that we have selling pressure there, but also that the sellers took control. Not on the 5-minute only, but it was supported also on the hourly, which is much more significant, of course. And that to me confirms that a 5-minute is a great area. And as you can see, this is the structure. And I would use that as a refinement area, because when the market comes back within that H1 order block, this is, let me see how big this is. This is about, 8.76 more or less dollars, which is can be about 30% of, depending on the volatility, of course, but it can be 30% of the daily ATR. That is not a very small area, tight area. So if you want to be selling this, the question I ask myself is, what structure within that area on the H1 will be perhaps where the market would want to reverse from? And to me, that answer is that first source of that move down. And it was, to me, that's how I interpret that market comes back to that. There is this wick, but this wick was at the end of the session. So that's swap rollover time. So to me, that's not the moment you would be entering. You will be entering when there's, of course, no rollover of time, and that's when it came back in the Asian session, and that's when we had that sell off. So even if it takes a lot of time to get there, on the higher time frame, on the 5-minute, it looks like too long, right? Why would that structure still be relevant after so many hours passed away? But if you look at it on the 1 hour, you will see that it makes sense to wait for it on the 1 hour. That's not too much of a. So how many bars is it since it made that? This is 10 bars, right? It's not fresh in my typical definition of fresh, but it's still within, not very far away from being fresh. So those structures, they keep they maintain their significance in the market, even if a couple of bars are printed. That was that's the reason. And as it moved
this
back,
guy is obviously tired of us looking at what gold has done. So I'm going to tell you exactly what gold is going to do in the next live stream. Not kidding. I'm going to do it right now. All right. Where do we have gold? We have gold right here. This is what gold is going to do. We had the rejection. We had the bounce. I think gold is going to exactly 2,342. This is not financial advice, but I'm pretty sure that's what gold is going to do. It's going to be interesting to see where gold is trading tomorrow. But I think this makes a lot of sense, right? So I think we are in a big trend here. I mean, it range. I think we are currently testing the range EQ. It looks like we already had a retest. It looks like we have a local uptrend. I do think we're gonna move higher, and as soon as we're gonna break above that 2,330 level, I think we should move up towards to 2,350, the range highs right here.
Yep. I'm that top of the range looks like a nice area where price is looking to push up to.
Yeah.
A lovely break and retest.
Guys, I want to ask you all for a favor. So I know that a lot of you watching here are not subscribed to the channel. I know that there's a big percentage of you watching that is not subscribed to the channel, and I get it. I understand. You're in the Discord, you're following us on Twitter, you get the notification, you might get the email, you click the link and you watch live, and you don't really see a reason to subscribing to the channel. But remember this: the more subscribers we do get to the channel, that will enable us to scale up the guests, scale up the production, and get better, higher quality educational content for you guys. So clicking that subscribe button means a lot to us. It's a small gesture for you, but it means the world to us. So if you're watching this, you're not subscribed, remember to do so. That would be very, very much appreciated. Now
I can
with that,
I can tell something. I can say something about the future price of my expectation about gold, and
Go for it.
I have a I have an expectation as well, and I think this is the right moment to say it, because we are. If you look on the daily, you are obviously we're coming from below. I'm sorry, and we haven't really broken any significant structure. Right? To me, the structure is even lower actually. So this is in my definition, this would be the neckline or the break of structure, and we're still in a bullish trend. And what we see here is the daily order block being what it is, a demand area. It's a bullish structure. What does market do when it comes into it? The first time it comes into it, it leaves a big pin bar, a big wigged bar with a small body. That's a pin bar. The second time it comes in with a lot of selling pressure, it's still unable to break and close below that order block. So that order block, it's doing its function perfectly. Afterwards, while on every single days, because this is in the daily time frame of every single session, every candle, it has been interacting with this order block. And then yesterday it formed that new fresh order block, that engulfing. We're on top of the existing order block. So what it is telling me is that the market is confirming that idea that it might reverse from here, or at least have some kind of a pop. So my expectation on the daily time frame, which is where it will be for the coming days and perhaps a week or two, is that it's going to have, if it closes, it already closed, it already formed this order block. So what my expectation is, the market has shown us that it wants to go up by forming this engulfing. It did it at a relevant area when it was interacting with this order block. And my expectation is it's going to have easier time going up than going down, right? It is leaving a demand area, and the question is, how will it go? Will it go straight without coming back to retest this order block, or will it first retest that order block and then move out? That is something, there's no one who can tell you that, because that's predicting the future. I don't predict it, but what I see is, what I read is that the market wants to go up, and it's either going to be one of those two things. It's going to come back to retest that order block, and from that area move to the next structure in the opposite direction. And what do we see? We see within this the weekly area, we see a daily order block. So market, to me, what is the possibilities? Well, it is probably it can either go to retest and then move out to this daily. I think that is one of the one possibilities, something like this, as it moves to that order block. That's the only thing I would like to expect, nothing else. Or it can move towards it without the retest. But to me, my expectation is it's going to be going up in the coming days. But that's not a prediction. That is just reading price action. But
Projection.
unless it's what did you say?
A projection. Not a prediction.
Yeah, that's
it's
a projection. Yeah, it's a projection. It is something based on the information we have right now. If, for example, before it reaches this order block, it makes a bearish structure, then I need to adapt and read that and accept that maybe it will not reach it anymore. But since we don't have that data yet, based on the data we still have, it looks like the market wants to go to some bearish structure above this. And since it already interacted with this order block after breaking it, I would think that it needs perhaps the daily, but that's what I think. So yeah, I'm agreeing with you, Jonathan, that I would be looking for longs. At least I will have a long bias on the daily time frame for gold going
Nice.
forward.
Awesome. All right, guys, like the video, and yeah, so we have about 30 likes left, and then we are going to activate the giveaway for you guys. So make sure that you hit that like. You're gonna hit it up to 600, and maybe you can get it to 700 before we end the live stream. We got 30 minutes to get to 700. I think that's very, very much possible. So make sure that you just smash that like button as soon as you come into the live stream. It's working. Every time I say like, this actually increases in likes. What I'm doing here is I'm watching AUD/USD. I think we have a very clean range here for AUD/USD. I guess if you don't want to call it a range, we basically just have two very simple, clean horizontal levels right here. I'm watching a potential rejection here up at that level. The only thing that I'm not really that happy with is this level right here. I think I'll have to use that level as my TP. I would love to have seen this, something like that, and I could use this level as TP. But now I'm looking at that as my FTA. So we got to go down into the lower time frames to see if the risk to reward would actually even be worth it for this trade. And I think it's not looking great. I mean, we can add the fibs here, and we'll see that. I mean, it would be a really, really good entry to get in up here, but I think I'm not sure what I think about that, honestly, because honestly, like what I want to see is I want to see prices below the level that I'm watching before I'm shorting. So if you look at the daily, pretty big level here, and I think actually, you know what, I think I think that makes more sense. If you go into the 4 hour now, then well, maybe we'll see. Basically, I'm watching this, right? That's what I want to see. We'll see what happens here. I wouldn't have liked to see if we had this type of price action. That would have been better, and then I would have shorted it here, but we'll see what happens.
EU is breaking out very nicely.
Yeah, I quite like. So I was actually long in this area earlier today on a lower time frame. And let's see, I've actually, see, I got long twice actually through. So I had it a position, it's on the lower time frame, looking for it to break out. I had added to the position as well. I got stopped out, entered into again, got stopped out again, and then eventually we got that movement. So that is it. But the 4 hour, obviously, we were talking about in the beginning of the stream. We were talking about this break retest. Obviously, on the 4 hour, you've got the 21 EMA as support. You've also got this area of support and resistance, and you've also got all of these wicks of candles, which is just highlighting to me there is buyers down in this area. And then just basic market structure. So we've had breaks, retests of levels. It's just super easy way to trade. Or we can have a retest of a breaker right here. So you got a retest of a breaker into the fair value gap, continuation into liquidity at the top. I'm joking, but that is it. So I think what I'm looking for euro is eventually a target for 8119, which is this level here. Eventually, and maybe if we can see later on. First, we've got quite a lot of resistance here, but I am looking for it to get to the 8119, and eventually later on in the week 8583, which is around here. Let's see if that actually happens. But that's where.
All right, guys, you can find the. You can find the link and the secret code in the scrolling text, and then you also see the comment. And this comment is also pinned in the comment section. As I told you guys, at 600 we're gonna activate the giveaway, and that's exactly what we did. The live stream is not ending just yet, though. So if you want to have more accounts given away, you will just continue hitting that like button. And we are at 615 right now. If we get that up to 700, we're going to give away 720K Bootcamp accounts. And you saw Alan come in here recently in the beginning of the live stream, and he was actually one of the winners of one of our giveaways here in the live stream, and he passed an evaluation account and got funded. So we're giving away real accounts. You have a chance here to win an account and actually become funded with the 5ers, and take that step into the world of professional trading. So check the pinned comment in the comment section. EU, I'm we're watching. I definitely think EU is on its way higher. We've entered the previous range here. We have reclaimed the range lows. I didn't have any opportunity to get into a long here because I was basically waiting for more of a move down to this level, and I don't know, like what we're seeing right now is kind of like a low time frame range right here, and I don't want to be long here. I feel like I would rather have seen. I mean, if you add the fibs here, you'll understand. So if I add the fib from that low to this high, you'll see that we can add the 50 here as well, and you'll see that it's just a perfect level. It's just a perfect level, and I want to make sure that the trades that I'm taking make sense from from a point of view of horizontals and break and retest. And to me, this is an untested level, and I feel like it still has a chance of coming down and testing that level. So I'm not sure that EU is going to run from current prices, but it most definitely looks like it wants to continue higher. But when, I'm not really sure when, and because like that, this level is just very, very obvious to me. So and I mean, we're still, I mean, like we talked about, like Victor always says, never trust a moving candle. This candle is moving, and we don't know if this is going to be a bullish candle or if this daily candle is going to close down here, or if we'll see a wick down to that level and then a close bullish. So I think a break and retest here still makes a lot of sense. Like, we can see something like this. I still think that makes a lot of sense before we have that move up here, and it would align. Yeah, so that's basically what I'm watching on EU. A quick update on the trades that I'm in. So you can see that the trades that I entered here are highly correlated. You see USD CHF moving lower, while CAD CHF also is moving lower. So basically, that they're basically the same trade, but it's almost like a hedge. So if this one gets stopped out, when CAD CHF is trading down here, most likely USD CHF have broken down. So I'm hoping that, if this one gets stopped out, this one is going to run down. If this one gets stopped out, then the other one is going to continue to the upside.
Nice. Maybe I can show my screen. What I have been seeing is on EU. It was right at the beginning of the stream, so I wasn't looking for that entry at that moment, but it did come in. If you look at the H4, which the order block that was formed, and within a certain number of, while it being fairly fresh, or actually just fresh, I shouldn't say fairly, as it came back to that order block to retest that, you go to the lower time frames, you wait for a bullish structure to form. It did form one here on early on, but that was before my trading time. So I would be looking from 8 o'clock my local time, which is UTC +2. And after that time, this is the area. If let me move that around. This is the H1 that formed. Let me get that out of the way. This is the structure that I had. I didn't have this, by the way, because I was opening the I was getting ready for the stream. But this is the H1 that was formed after it came back and it was trying to move out of the order block. And what is the H4 order block, right? So because this is the H4, and it then forms an H1, and it is in this candle, this wick, that the entry would be. That's in here. And if you go back, that would be that corresponds with this move. That's this little move that comes back. I'll take off all of everything. It is the order block was formed, the H1, right? Remember, from the H4 to the H1, the H1 form was closed at this hour, and then after that it comes back to retest that newly fresh formed order block. As it moves out, I have to admit that I didn't get that entry. But if you were and adjusting for all the entries, you will be able to catch perhaps this entry, which is would have been very nicely entry. Price comes into that entry order block and moves away from it. And if that would be the entry going, you would be entering something around here with your stop either below that order block or below the whole structure, and aiming for something on the higher time frames, maybe on the 1 hour. I don't see anything on the higher 1 hour, so I would be targeting either this high for something of 1 to 1.8, or perhaps depending on the ATR, you could be targeting the whole top of the range, which is this, for a 3.1 to 3.4 risk reward. And let me see, the ATR for today gives us something in the range of 0813, which is basically, this is the ATR of today, right where my cursor is currently, which also gives me a good idea that I should not put it right there, but maybe a little bit before it. But that would be something that isn't. Is that exactly your trade?
Pretty much, actually. But my take profit's a little bit further down. My stop loss is below the lows, and then
if
I find
I would be entering
to
it's a little bit of a greedy trade, actually, when I'm looking at the risk to reward. To be honest, I've already hit the risk to reward at the moment, but that's where I can see price going to. If it was going to break down, it would have broken down at the area that it's been consolidating for the whole morning and the whole of London session. Now it's breaking up in New York. I'm expecting it to break up and make another high.
This retracement is what would have triggered me in, and this was exactly minutes before the stream started. So I wasn't with my finger on the trigger. I wasn't looking at this the way I'm looking at it now. But this would be in what I mentioned of the risk reward of 1.4 and 3 something. That is based on the safest stop loss placement. If you had put it under the entry order block, of course you would be talking of a risk reward profile of much more 7. But that is more typical of how I would trade, because that's a stop loss of 6 pips, which is something I would be aiming
$600
for.
with a 10 lot.
Yes, exactly, indeed, plus commission. Yep. So that would be a 7 in that range, more or less. This looks like the typical things I would be entering and targeting one structure on the bigger time frame, like either the ATR for the daily or some at the end of the range, whatever that it is that I find that is likely the price will be hunting for.
Yep.
But
Let's
for
take a quick
transparency,
look at.
I did. Go ahead.
Let's take a quick look at USD CAD. We had Macintosh wants us to take a look at USD CAD. He's been asking quite a few times in the comments. So let me first give you my ideas here that I'm watching. So obviously this is on the weekly. We can see that USD CAD is in a high time frame range. It's been in this range since September 2022. It's got quite clear levels on the weekly. These levels are also very clear on the daily. And what happened here was we had a beautiful breakout here on the daily, and from we basically broke above the range EQ, came up and tested the highs right here, and adding the fibs right here. You see that you got that 0.618, the reload zone confluent with the breakout area, and then you had that that test right here. We kind of front run that area, right? But if we add the 50, we see that there's very good confluence with the daily candle closes here with the 50. So to me, I was looking at a long the hope that price we're gonna basically form this structure, but down here that obviously never happened. But I still think, looking at the daily, that this is still a decent support area. Looking at the 4 hour, what we have now is quite a good structure. I mean, it does look quite interesting for a potential long somewhere around this area. And we're right now testing that level. So we can look at the fact that we had that, we had this downtrend, kind of looks something like this. We had that W structure, a massive breakout, and we're now retesting this level. I remember when a lot of times when we had Saul on here, he talked about how he wants to see his best trades and his best entries are when there's like a strong move, right? A strong move out of a level, and then a strong move back to that level, and usually you're going to see a reaction on this retest, right? So a violent reaction, violent move, and then the same type of reaction down again, and it's going to be the first retest, right? So there's a lot of things happening here on USD CAD that makes me think that this might actually be a pretty good area for an entry. So we now know that we have levels on the higher time frames. We're looking at the 4 hour. We have a breakout structure at the 4 hour, very clear reactions right here. What I would like to do here is I would like to go into the 1 hour, or maybe even the 50-minute, and see a clear reaction here. So maybe something like this, right? If we have something like that on the 1 hour or the 15-minute, and I think this is definitely a trade that might be worth taking as a long on USD CAD. And we're also, I think for this, if you're able to get a low time frame entry, I think you could have a really good risk to reward even to that high. I mean, if you're looking at the 15-minute, what if you form this, right? What if this is the beginning of a W like that? Well, if you break that neckline of a W, retest that one, and this is your target on the higher time frames, this is actually, that target is not that far away. But the risk to reward of this trade with a fairly wide stop loss can easily be 4 or 5R. When I say that that FTA is not that far away, it's on the bigger picture. We're still, between range EQ and range highs, and it's not that big of a move. It's not really that big of a move, right? And it just it's a very clean move here. And if we can get that, you can see here on the 15-minute that you never really had a break and retest of a W. Like here, you had a possible break and retest of that W, but it never happened. You moved lower. And if we had that, then this is the pattern that we're looking for. So now we might actually be forming that W structure on the 50-minute. So break and retest of that one would be a really interesting trade to take. All right, that's USD CAD for you guys.
Yeah, very nice, nicely put there. Yeah, the market is has.
Oh wait, I was using the
upside.
replay function. This is not where we're trading currently. Wow. I was using the replay function. That's embarrassing. So we're actually we're actually here. Okay,
I did
that
not
makes
notice that.
that makes huge difference. Let's look at 1 hour. Okay, yeah, this makes a huge difference. Okay, so on the daily, we came down, we hit the 0.618. We actually did hit the 0.618. We reclaimed the 50%. Yeah, okay. This to me right now is it's too messy. It's way too messy for me to take a trade on this. For me to trade this, we would have to reclaim this level and then perhaps take a trade based on that. But then now you see the risk reward is 2. So yeah, not yeah,
But I think
yeah, Luke, I saw that. I saw that.
maybe that I think you can actually, it can be helpful, because as the market progresses, we need to adapt our view and our reading on it. And even though you had it on the replay at a previous point in time, it doesn't matter. How would you? What difference does it make for your previous analysis if you consider the data that you were not considering yet? Does it change the bias? Does it change your entry? Does it change your expectation of where the market could go? Because that is basically the process that we need to be doing. As a trader, we have an initial idea, and as time progresses, it gives us more data, and we may have like more entries, or maybe we hold off that entry because it no longer fits the bill.
Yeah,
So
I looked
how
at
does
this
it
and
change? How does it change your initial analysis?
well, I think I think what's important to realize is that the initial idea was to go long. So when I realized that I was using the replay tool and I went to real the current prices, I think somewhere in the back of my head I thought, all right, so how can I look for long with the current price structure? Like how can I stick with the idea of going long? But then immediately I kind of switched to, I had to remove that. I had to remove what happened at that time, because we're now, different market structure, different price action, and
Exactly.
the new possible opportunity has no correlation with the previous analysis. So it's sort of like you take one trade on Tuesday. All right, well, it's Tuesday today, so let's do Monday. You took one trade yesterday, right? And then you look at the same pair today, and you have to realize that the trade you took yesterday has nothing to do with the analysis or the trades that you're taking today. So actually, I think that was a good example of that. A good good example of how you should react. Because when you realize that, right, this didn't happen, that's not where we're trading, quickly looked at current price action and quickly decided that, okay, this is not what I want to be trading.
Yeah, the fact that you had a bias and expectation based on previously, and now that you're considering new data, you have to not marry the idea you had yesterday, but assess the situation based on the information you have now, including what's yesterday, but also what you have now. And if that invalidates, or if that weakens the idea that you should be going long, you should not, try to force and keep looking for that long if the market has changed. That is something, that's a process that's actually very very useful, and it's something I have seen myself doing it. One of the things and that's why I like being a intraday trader, because the idea is I'm going to enter this trade, and the intention is to close it today, because that is where my analysis stops. Tomorrow is another day, and I will be assessing tomorrow's opportunities based on tomorrow's data, not on today's data, right? So if
it's that data, it's that saying, you're trading in the zone. Mark Douglas talks a lot about how every new opportunity is completely random, right? So And it's an interesting interesting idea that you can make consistent returns from, you know, a random process, because that's basically, I'm not saying it's not a random process. I'm trying to find the right words here, but the idea that every trade is random, right? The market is on an individual basis. It's random. We don't know, like, we're looking at EU and we have no idea, like the trades that I'm currently in, and we can look at, you know, USD CHF. I don't know if this is going to hit stop loss or TP. That's completely random. I don't know. You know, it's completely uncertain. But what I do know is when taking these trades over a long, you know, long string of trades or a big number, I should have close to 50% win rate. So it should be, I should have a pattern there, right? I know that now, looking at the market right now, it's interesting because there's not a 50% chance that this is going to work out. But if I take this trade times 100, the win rate should be 50, which kind of like shouldn't make sense. But
No, it makes sense.
But it's
it does
all
make
about
sense.
Yeah, if you got a win rate of 50%, but your R&R is 1 to 3, well, you're a very, very profitable trader. That's
what I'm saying is, just because my win rate is 50% doesn't mean that there's a 50% chance of this trade winning. If I have a 70% win rate, there's not a 70% chance that this trade is going to win. So every trade has a completely random outcome, but the 100 trades have a consistent outcome. Basically,
what you're actually saying is that if you take this 100 and the next 100 trades, let's say you have a measured win rate of around 50%. The first 100 will be around 50, and the next one will be around 50 as well. In that sense, that's the certainty you have, but it's over the bigger number, a big sample size. When you take it on the individual level, you have the distribution of your profits. That's where the randomness comes in, because you can have within that 100 trades, you can have the 50 in the first 50 trades, right? And then lose the other one. But that is within the range of, although that is highly unlikely, that is within the range of the fluctuation in randomness, right? Because the next one, or even this trade, that's random if you're going to be hitting the TP or not. You can only assess the probability based on the larger number. But the randomness comes in when you have individual trades. And that's what we need to understand as traders, that you are not able, the fact that you have numbers on the bigger let's say 100 trades doesn't mean you can predict this trade or even the next one, even the next 5 ones. That doesn't work like that, because it's the distribution of the profits is random. And that's something we need to accept and embrace, and not stick to our, don't put expectation and be frustrated when it doesn't hit TP because you have your data that says you're supposed to hit it. It doesn't work like that. It works when you have a bigger sample size, 50, 100, and so forth.
So I'm very tempted to go short here, because you can see on 80 USD we have see that one we did hit that 0.618, and you look at the 15-minute, we're potentially about to close quite a bearish candle here on the 15-minute. I'm not going to take the trade though, because it doesn't feel right, and I'm already exposed to USD. It doesn't really feel right. I want to see a better reaction here. I don't know. Like, I think for me that's a to me
for me that's a short.
Yeah, I know. And technically for me that's a short as well. But I think one of the biggest, like, my edge doesn't really come from technicals. I know that might sound weird, but like my way of trading from a purely technical point of view is very simple. It's break and retest, right? But I believe my edge comes from carefully planning, reviewing the trades, and also listening to my gut feeling. I think that's actually, like, when I follow that process of being very disciplined with my planning and being very disciplined with my journal review, and also trading based on my feelings, which I know a lot of people say you shouldn't be trading on feelings, but there's a difference between trading based on fear and
Intuition.
greed and the intuition. Exactly.
Yeah.
So right now I feel like ADUC, something's telling me not to take this trade. So I'm
Do you
not
know
going to
what?
take it, you know?
I'll play devil's advocate, and I will say this one thing for that trade to not go short. The reason why is if we actually go back to that chart, you see that massive push up. If you take the low and you take the high, you're still in the range of it still being bullish. Okay, now you put it on a 4 hour. Now you put it on a 4 hour, it kind of looks like you're at the top of a massive range.
Exactly.
But,
and
but it's
but then again, I mean, you add this. I mean, you could definitely, I mean, you could definitely create a support here. You can definitely watch this as an uptrend, right? You can definitely see something like this going on. So yeah,
you just gotta pick your poison.
Yeah, and also that's what I said. I think this is actually the reason why I'm not interested in shorting this, you know. However, if we had this, if price action looked like this, right? If price action looked like this, and we had a level here, and there was a very clean and clear break and retest here on the lower time frames, yeah, that's my trade. That's definitely a trade I would take.
What you could wait for though is obviously if you go back to what price action is doing right now, what you could wait for now to see what it actually does is all for the break the top of that range and get in on a retest again of that break, or if it actually starts breaking down now and then it takes that low, then you get on the retest of that break. Just get onto the retest of whatever breaks first, because you don't know. At the moment it's in a really tricky area. It's still in a bullish range. For instance, you've still got that massive push up, all of that, like, you know, the guys would call it that fair value gap you can see there, and there is potential for it just to continuing up. Then again, if you're on a higher time frame like 4 hour, you are at the top of a range, and how many times do you really want to get long on top of a range? It's like,
yeah, I mean, I would not want to, like, this is definitely not something I would long. And also look at that, it's a perfect retest, you know. It's a clean level, it's a clean candle going through the level. You have the retest right here, and now you form a 15-minute bearish engulfing candle. So yeah, it's definitely clean short, but I have to stick with my initial, what I feel is my initial feeling is usually the right feeling. And when I keep going deeper and deeper into the charts and doing more analysis, it's just, you know, analysis paralysis basically. We had a question on what LP does the Fiverr use. I know that's like
we got a few
big ones. Those who know, they know. We did an interview with Gil, the founder, a while back, and yeah,
it's not stuff that we're gonna keep going over, and plus it's kind of a business edge for us.
Yeah.
So just constantly reminding people who it is not what we really want to do. But you've got quite a lot. We've got a few different ones, but they are a prime of bankers, and you know, they are well-known names.
The best of the best is what a lot of people would say. Really, honestly, like it's the trading conditions here at the 5ers is. You know, I've been saying this since way before, you know, working for the 5ers. It's the trading conditions here are the best, basically.
Yep. And we got top level support as well.
I'm looking for that,
guys. I think
the link to put it in.
All right, guys. So I'm really looking forward to roasting some coffee and putting on my new espresso machine. What do you guys say? Are we should we run the giveaway so that I can start roasting some coffee, sending him out to Fernando's, getting a badge.
Stop loss getting taken for that little ad we got in there.
Oh, really?
Well, it isn't yet. Hold on a second.
That should be hit.
They should be hit.
Yeah.
No, not
Is
yet.
it? Oh, it's not.
No,
Look at
not
that.
yet,
Look at the
not yet.
spreads here, guys. So can you imagine not getting stopped out there? Like this is on the 1 minute.
That's
Yeah, this is
ridiculous.
on
Yeah.
1 minute.
Oh, 1 minute, though. Yo, literally, that is
Yeah.
insane, isn't it? Okay, that's it. Yo,
By the way,
so
I've
can
been
you-
looking at Aussie dollar, the what you guys were been talking about, and it looks very interesting from my point of view as well.
Yeah.
I can show you if we have the time before the giveaways.
Yeah, of
Yeah, go
course.
for it.
Of course. Guys, we
Let me
have
see.
700 likes right now. We got 747. So if you guys can increase the like in the next few minutes to 800s, yeah, you know what that means. You know what that means.
Yeah, if I look
know
at
what
this,
that
what we have on the lower time frames, just look at, without going into a deep analysis all the way from the monthly, etc. But if you look at the weekly, we are currently we're retesting a newly formed bearish structure, right? That is one thing that has my attention already. So through all this area, I want to be looking for that bearish setup on the lower time frames. If I go to the daily, I don't see anything in particular in terms of setup, but I do see that we are retesting a bearish structure on the daily as well. It's not a setup for me because I have my specific areas and specific rules for which ones are and which ones aren't setup worthy. But this is indicative. It is in line that the weekly we're area to go short. We're in a daily, we're in an area that we could expect some selling coming in. And if I go to the 4-hour, what do I see? I see a H4, right, being formed. While you guys were talking, I started analyzing and I did this. We're looking at a H4 order block that has been formed, and we are currently retesting it. And if I go to the lower time frames, I find another area that could be of refinement. And if you pay attention, you see how the wick on this this area is maybe missing it by a few pips, but is very, very close and reacting. Looking at that wick, how it's reacting to that order block, at least that's how I see it. Here it's a bit more pronounced how that wick on the hourly is playing with the H2 order block. And what do we have here? We have another order block right there. It doesn't mean that the market will bounce necessarily from here, because based on the H4, I'm looking at the whole area to be an area you could be selling from, right? The whole H4. And let me go back to the H4 so I can show you with more precision. That's the H4. Let me get it actually to be completely precise. It is the open of that candle, and this is the area on the H4 that has my interest. And then I go and look for the H2 and H1 to see if I can identify structures that will give me a good chance of looking for a short. And this is a tight, very tight, nice area where price could be rejecting from. If I go to that, we'll have to see how price, and with that, I can move my area of interest to exactly that area on the H1, right? I put it back. That's that is the range of the H1, right? The range of interest. And it is in there that I would be, if I would be trading this pair, that I would be looking for that reversal pattern, right? That may have been, let me get that. That's the left shoulder. This would be the head, the left shoulder, the break of the neckline, and then the right shoulder. Maybe that is already happening on the lower time frames, but I don't see it on the 5-minute yet. There is a little structure here on the 1 minute. Let me see if I can point you guys. It has already, see the horizontal yellow line. So we already interacted with it. And if we see, this would be my neckline on the 1 minute. And if I draw that, we have a couple of this area that will be on the 1 minute interesting for me for an entry. And perhaps we have something else. I don't see anything else right now. Perhaps this one. There we go. This is another one. It hasn't been invalidated. So these two areas, I would be happy to sell from. I mean, this is the way I trade. So when it comes into here, I would be getting my trade in either putting my stop here, putting my stop there, or with some difference. And then once it gets hit, I stop looking at the hour, the 1 minute. I go back to the 1 hour and I just let the market play out. If it is going to stop me out, then I accept that. That's fine. But if not, I'm going to target the next hourly structure right there. And this is a 3.2 trade. It makes a lot of sense in my point of view as well. So I would be a seller here based on the fact that the weekly, the daily, the H4, the H1, they're all telling me that this is a good area for it to go lower.
Nice.
Yeah, I guess so. We're all agreeing that we should short. Yeah, I'm very tempted to short this. I'm not going to though. I feel like
stick with your intuition. Intuition keeps you alive.
I feel like it. And you know what? It feels good. It feels good to be able to say like I'm not going to take this trade, and then actually not take the trade. You know, a lot of times
I thought you were
not going to eat the cookie. You're not going to eat the cookie.
And then you eat
exactly
it.
like yeah. So you know, a lot of times we look at the market and like, I'm not going to take this trade. And then like, you know what I did yesterday? I took that trade. I got stopped at. Like a lot of times that happened. Like we you know, we talk to each other obviously, you know, between the live streams, and it's like, yeah, you know, that trade we shouldn't be taking. Yeah, I took that one and I got stopped. Like it happens a lot of times, you know. So
what are the likes?
But then tomorrow, yeah. All right, guys. We how's it going with the giveaway? We got 780, 86. Let's give it a few minutes. So we have 14 likes left, guys. So if you can like the video 14 times, we'll give away 1 extra account. So you got a couple of minutes, only a couple of minutes. I'm gonna put my timer on 5 minutes. Okay. Do I have a timer? I do have a timer right here. 5 minutes. Okay. In 5 minutes, we will select the number of winners. We got 10 likes left. That means you have about 30 seconds per like. Oh, it's 800. Okay, let's go. That was quick. Yeah. That was quick.
That's
nice.
good, man.
Yeah.
Good
job, guys.
I think go ahead.
Yeah, so like I said before, I do know that I've seen because I look at the statistics. I know that a lot of you watching are not subscribed to the channel. Okay, guys, and I understand why you're not subscribed. It's easy, you know. You get the email, you get the notification, you pull up YouTube, and you can still watch the live streams, and you don't have to be subscribed. But we are going to change so that only people that can comment. You have to be subscribed to comment, and when you do subscribe, you're giving us a signal that says, you know, you like these live streams, and the more subscribers we can get, the better the content is going to be. We can increase the quality of the content. We can, you know, scale the guests. We can do lots of good things if we can increase that subscribers. So it's not only about liking the video, it's also about subscribing to the channel. So hopefully you've done that now, and we're going to select 8 winners. Let's see who we got today. Good luck, everyone.
Good luck, good luck, good luck, good luck, good luck.
You have to come on the live stream, by the way. We get that question quite a lot. You don't have to come on the live stream.
Lewis, why? Like, yeah. Louis got this yesterday. He's already been given his account, so I'm doing a repick. There you go. Great.
Gotcha. All right, we got. Yeah, I'm gonna do it. We got Alessandro B, Pam T, Paper C, Under K, Sasha T, Matt P, APG, Michael S. Congrats, guys. Much appreciated.
Congratulations.
Nice.
This can be the that seed that grows into a nice tree in terms of
no, you got an account, guys. Okay, so you got an account. 8 people, you got an account. Don't you take care of this account, okay? This is an evaluation account. You'll listen, you'll get funded if you go through this evaluation. Take the knowledge that we've given you here today and all the other live streams and apply it to this evaluation account. When you get the account, maybe you're like super happy. You're like, oh, I can't win. Can't believe I win the account. take a couple of days, and take it easy, because if you're like super euphoric and super happy about winning this account, it's going to affect your trading. Remember, trading is all about being balanced mentally. Take decisions not based too much on the exaggerated emotions like fear and greed, euphoria, and that sort of stuff. So take it easy, move slow. Remember, you have unlimited time to complete this evaluation challenge. Take your time, risk small, and trade the break and retest system. Tomorrow we have a surprise. It's going to be a good one. All right, we're going to do a trading competition. It's going to be amazing. You guys know the Wednesday trading competition, it always gets quite crazy, and we have an extra surprise for you guys tomorrow. It's going to be insanely fun. I'm going to be laughing quite a lot, I'm sure. It's going to be very, very entertaining. We're going to be trading free for all. We're going to be selecting 3 pairs that we're trading on the same account, and we're going to try to make as much money as possible within that 2-hour period. This time it's time for Victor to win. Last time I won. At the time before, Alex won. This time it's time for Victor to win. I have a strategy, and I'm not going to tell you the strategy today. I'm going to show you tomorrow, but it's a really, really good strategy. Actually, I'm going to tell you. What I'm going to do is I'm going to wait for Victor and Alex to be in a drawdown. And that's when I'm going to start.
That is the biggest loserist kind of. God,
I'm doing this to win. What are you talking about, dude? Well. Yeah, so Fernando is definitely onto definitely onto something here. No, I know, man. So I actually thought about this, and I decided that everyone has to take a trade like within the first, there's going to be a time period when if you haven't taken a trade after like the first 5 or 10 minutes, then you're disqualified, right? Because I thought about it, and I'm like, yeah, I'm not going to do that.
Only FX as well, no commodities.
Why not?
Commodities,
more comparable.
Gold moves, gold, yeah. You don't want to be.
They're more comparable in terms of volatility.
Taking my signals and just going opposite, and then just putting more size.
And in the meantime, that we are talking, look at that possible entry order block. It's doing its job. It looks promising. I don't know if it's going to work or not, but look at those. Look at the all these wicks. Price is having difficulty, going the other side. Once it went the first time around, the second time you can see all the wicks. They seems to stop at the same price. Look at that. See that? Apparently there is my understanding of this is that possibly there's a large pending order right there that impedes price to go in any further. Will this work? I don't know. I have no idea. But this is the best place I can identify where I want to be entering. And by the way, I entered on one of my accounts on this one. Even if it's not a pair I trade, this is the system I use every day. So I have confidence I can trade it. I can use it. Let's see how it turns out tomorrow. Perhaps I can revisit that setup if it worked out or not.
All right, guys. Thank you all for joining. You have to all, you don't want to miss yesterday's live stream. If you thought this was good, just wait. Tomorrow is going to be fantastic. We're going to be making so much money on our demo account. You'll be going crazy.
Green with envy. Totally green with envy.
Green with envy. We're going to be buying demo Lambos, demo houses, demo fishing boats. Definitely fishing boats, yachts, and yeah,
let's go.
Special guest coming up as well. Take care, guys. See you tomorrow.
Till tomorrow. Bye-bye.
Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at the 5ers.